What's up, everyone? It's Scotty with MoneyVest. So markets here also pulling back a little bit, started to rebound slightly to gain back what we lost during the week. The nasdaq was up a little bit over 22 basis points. You got the S&P 500 very flat, and the Dow Jones here slightly down about 20 basis points as well. So hope you guys are doing great, and I've already done a couple videos that have been very important for our buying window, for our discount window as I like to call it. And of course, a lot of stocks, a lot of individual companies and indexes are coming down to our fair value. They're not there yet, and I want to once again reiterate the difference between fair value and undervalued, because there seems to still be some confusion. I'm like shocked that people still have this confusion between fair value and undervalued. Like in my yesterday's video, I pointed out that S&P 500, my ideal level and preferred level would be 3,800. And I really shouldn't have said that, because I feel like it just creates a lot of confusion. And man, it's like my fair value is 4,000, right? I did the calculation in one of my previous videos where my fair value, my intrinsic value is 4,000, right? That's the level where I believe the S&P 500 should be worth, right? That's how much it should be worth. But why do you think I'd be interested in buying at 3,800, right? What is the difference between 4,000 and 3,800, right? 4,000 being my fair value, my intrinsic value, and 3,800 being an undervalued level, because it's going to be worth less than my fair value, right? That's why I would prefer to buy it at 3,800. That's why 3,800 would be an ideal level. Now, is it going to get down there? That's for a different topic. That's for a different question. That's for a different debate. That's for a different video. I don't know. Bottom line is, nobody can make predictions, but those are levels that I'm really paying attention to, that I'm watching, that I believe are going to offer up some very good deals in the market. So I'm not changing my fair value. I'm not changing my buy targets. No, it's 4,000 is the fair value. 3,800 is undervalued. Okay. And that's the difference. And again, we've talked about this, time and time again, but I'm happy to kind of explain these things. But at some point, come on, you can't make the same mistake 3 times, 4 times, 5 times, right? It's really important to understand these things, because it's only going to help you kind of figure out that, okay, stock XYZ has $100 is the fair value, $90 is going to be undervalued, $80 is going to be undervalued. So there are certain levels to watch for individual stocks, right? So for example, Tesla, for me, if Tesla has a 170 fair value, 150 would be undervalued. If AMD has an $80 fair value, $60 would be undervalued, right? So these are all ideal levels, preferred levels, right? So to speak. So anyway, going back over to the markets, quick tutorial that I wanted to give you guys, but S&P 500 here flat, still under 4,300. Now, there was an attempt to actually rally back higher and, of course, see some momentum, see some gains. NASDAQ here pushing up over 22 basis points, back over 13,000. And the Dow Jones here also down about 20 basis points, a little bit over 33,500 at the moment. So we did see some momentum back up. I actually posted a complete Discord text analysis in our Discord for our members only, going over how we are starting to see some pretty good risk-reward trade-offs here in the market, and this is going to be an opportunity, right? There's going to be potential for dollar cost averaging, at these levels, because of the reasons that I pointed out. I pointed out 4 to 5 different reasons in our Discord. So again, if you want to get access to that type of analysis and also figure out, what our members are talking about from a market and individual stock standpoint, get those members only private videos, trading view charts, and of course our buy and sell alerts. Links are going to be down below. There is a 16% annual discount that's available till the end of this month. So 2 more days left if you want to access that discount, and again, links going to be down below. So first things first, let's talk a little bit about the market here. And investors see 2023 gain as a bear market bounce and expect a recession next year. This is probably one of the most ridiculous headlines I have read. Not for the fact that they expect a recession next year, but the fact that they look at this 2023 gain as a bear market bounce. A bear market bounce? Like, are you serious? We are nowhere near close to a bear market. There's not a downtrend in sight. We've just been pushing higher in 2023, and they consider this as a bounce. This has been a very strong bull rally in 2023. I mean, NASDAQ, S&P, just individual stocks. Like, you expect me to believe that NVIDIA, Meta, that are up 100%, had a bear market bounce? Like, who makes up these articles? Like, it's just 10-year treasury yield reaches, of course, its highest level in more than 15 years. So, we talked about the treasury yield and how both the 10-year yield and the dollar index are putting pressure on equities. So if you come over to 10-year yields, you'll notice that we obviously did, rally another 1.6% on Wednesday. And then, of course, today we are slightly down. 4.6% is where we are. Not to mention the DXY also saw a very massive move up to the 106.6 levels. I actually pointed out specific targets and resistances for both DXY and the 10-year yield in our Discord. So that's something that we already talked about in our Discord part of the analysis. So make sure that you do check that out because markets are starting to come down. They have been selling off a little bit, right? S&P, NASDAQ, they're both down 8 to 10% from their recent highs. If you come over to the NASDAQ, you'll notice that from its recent highs of 14,450, it is down almost 10%, right? That's a pretty decent correction territory. We've got the S&P 500 here down a little bit over 7.4%. So these are not small moves. These are pretty decent, reasonable size moves. And that's really why, I believe the market's giving us opportunities here to look into dollar cost averaging. Now, everyone's got a different risk tolerance. And again, I want to point this out because it's really important, topic of discussion. And that is to say that, look, just because markets are rolling over 7, 8, 9, 10%, does not mean that everyone in this market is going to take the same action. Okay? Let me repeat that. Just because the markets are selling off does not mean everyone's going to take the same action. Everyone has different risk tolerance. Everyone has different time horizons. Everyone's working with different levels of capital. Everyone's working with different levels of risk. Everyone has different goals, right? So you cannot expect two people to behave the same way in any given environment, right? Everyone's portfolio is different. Everyone's asset allocation is different. Everyone's financial objectives are different. So you cannot expect one person, if you see if the markets are selling off and that person's not buying, don't think that, oh, they don't have the guts to buy, or they're not buying because XYZ. They're in different circumstances. They've got a different story. They're on a different journey, right? Just because somebody is selling at these prices doesn't mean that they're afraid or they're scared or they're selling because they expect the markets to go lower. No, maybe they just need cash. Maybe just needs the long-term gains are done and they need to pay taxes on that. Whatever the case is, the reasons might be in the hundreds, in the millions. So don't judge someone by if somebody's taking action or not taking action. Don't judge them by that, because everyone's on a different path, right? Everyone's on a different journey. Everyone's got different portfolios. So no two actions are going to be similar for any investor. This right here was the market here. So energy here pushing higher a little bit. We had comm services, semiconductors also pushing higher. Consumer cyclical, so Tesla here down about 1.5%. I actually shared my options on Tesla in my Discord. So I basically posted the 4 covered calls that are all right now profitable right now. So we'll be looking to close them out very, very soon. Amazon, about as flat as it gets. I did a video on Amazon, and I do think that the FTC lawsuit is a little bit more on the overblown side. So I did a complete analysis on that, so make sure that you do check that out. Apple here slightly down, Microsoft slightly higher. So overall, it was a very flat day with energy really leading the day here with the very strong move to the upside, kind of leading the best performing sector on the day. And in the last one day, of course, a very split market over the last 1 week. Energy is still the big winner. Everything else is straight up down. Orange juice for the win, so pushing higher, lower prices. We got oats, everything pushing up. With rough rice, we got feeder cattle, coffee, cocoa, all pushing back. We got Bitcoin here, just a little bit over 26,000. Ether also at just over 1,600 at the moment. So going over to S&P 500 here, this is the daily chart that we have talked about. We are very much inside this green circle, and what you'll notice is that markets still managed to close above this higher low. So you'll notice is that we were all the way down to as low as 42.36, and then buyers basically stepped in almost 1% to bring us back to this higher low and close as close to possible at 4,300. So this right here is still going to be that support level to watch for SPX, and we are hitting down to a lower low right now. Of course, if you do get a breakdown, then 4,100 is a possibility next. That's going to be a level to watch. But if we do see a bounce back higher from these levels, which again is possible considering that we have just been on this losing streak for the S&P, we've been down over 5-6%. If If you do see a momentum back up, 4,300, of course, is going to be a big level of resistance. We'll see if the bears can kind of keep us down, keep us below that level, or if you get a breakout past this level once and for all to come up to that lower high. But right now on the day, very, very flat, not a single move in the S&P. NASDAQ here, also you'll notice coming down to that lower low that we talked about, so now sub 13,150. So we did see a bit of a breakdown on the NASDAQ, and similar to the S&P 500, in case we see a breakdown below this level, next support is going to be 12,250. So that's going to be that next target, that next level to watch, and a resistance all the way up to these lower highs, sitting roughly at around 13,900 or close to 14,000 points. So those right there are going to be some levels to watch on the NASDAQ and of course the S&P 500. Apple here starting to break down. So Apple looking pretty weak, isn't it? 170. We got a big breakdown here for Apple below 172. And if Apple continues to see some weakness, well, guess what? The entire market is going to struggle a little bit. And that next support is going to be all the way down to these levels at roughly around 160s. 159 to 160s is going to be next for Apple. Amazon getting bought up fairly quickly here. Support level is going to stay put at 126. And this right here is the level that we pointed out. So this is a very nice support for Amazon. We've kind of bounced off of that 125, 126 level in the past. So that right there is going to be that support for Amazon. We've got a gap to fill on the upside. And of course, we did break down from this higher high and higher low pattern. So keep a close eye at 125, 126. I would point out as a next support, all the way down to a much better support would be closer to 114. In line with this previous resistance and a little bit of that support. But we'll cross that bridge, if and when Amazon breaks down below 126. But right now, kind of holding out onto that level at the moment, still very much in a downtrend, now making lower highs and lower lows. Tesla, on the other hand, 240. Look at that, 240, closing right on the dot, trading right at that support, higher low, horizontal support. So this is really the make it or break it moment for Tesla. In case we start to see a breakdown below 240s here, like today did get down to 234, but the buyers really stepped in. So in case we see a bigger breakdown for Tesla and see some more momentum to the downside, this right here is going to be that next support in line with that previous level, 212. So low 200s are going to be important for Tesla moving forward. Talking about Nvidia here, Nvidia is still holding up really well, up over 1.3%, $424. Next support is going to be down to $400. So this right here is going to be the level to watch for Nvidia. And again, kind of in line with that previous support, this right here, a couple times we validated that level, and support level is going to stay put down to $400. We've got a gap to fill, obviously, down in the 340s and 350s, but Nvidia's done really well, surprisingly well, and it's continued to push up. Now, AMD, I talked about this, that it is possible that after the breakdown below $100, it is possible that we go back up to retest $100, right? So AMD had a very strong day today, 2.2%, but don't take it to mean anything, at least not in my opinion. This doesn't mean like it's, going to break past this level of resistance again. It's going to be on its way back up. It very well could be, but from a technical standpoint, it does seem like it's getting back up to that resistance, potentially going to see a rejection in my view, and it's possible that we start rotating back lower considering all the weakness around from a macroeconomic standpoint and also in the semiconductor space, because SMH has also started to roll over after a very sizable decline and of course a breakdown that we talked about. So it's very much in a lower high and lower low pattern, very similar to what we have witnessed for advanced micro devices. So keeping that in mind, just understand that okay, there's a resistance at $100, a much better support at $80, and that's just really where we are, right? Right now we're pushing back higher to see that resistance at $100. High for the day, $99.23. We'll see if we actually do get a breakout past $100. If not, $80 is going to be my fair value, and again, 60 is my undervalued level, right? Preferred ideal level. These are not two different levels. These are just different prices with different meanings, okay? I'm not saying $80 is a fair value and $60 is a fair value. Saying $80 is a fair value, $60 is ideal. It's preferred because it's undervalued, right, at those prices. So that's the difference. Talking about PayPal here. And PayPal on the day selling off, so really struggling with a new 52-week low. I think the entire fintech sector has been under a lot of stress, a lot of pressure here. So just a little bit over $57 right now. Support level is going to stay put right there. And right now we're kind of hovering around 57. But this right here, of course, is going to be that support, and 52-week low, 56.53. So if you do see a breakdown below this level, well, It's just been a complete nightmare with PayPal. It's been, just this overall pattern, and the next support, unfortunately, is going to sit all the way down to as low as $44 for PayPal. I can't believe I'm actually saying that, but yeah, $44 is going to be that next support for PayPal in case we get a breakdown below $57, and that is going to be PayPal. Square, on the other hand, let's take a quick look. It's also been selling off down another 1.5%, and now sitting right at that support of $44. So this right here, actually, $42 is going to be that support. So we're not quite there yet, but a new 3-year low at $43.75. So that is going to be that next support level at $42, $43 per share for Square moving forward. And of course, it's been very, very, very oversold, for such a long time. It's just been selling off aggressively. So that is going to be that next support at 42. Next one on the list is going to be Meta Platforms, and Meta's still holding up really well, just a little bit under $300, down about 41 basis points. So not really seeing a lot of momentum, but still in the context of this downtrending channel of lower highs and lower lows. So that's really where we are, and that support level is going to be at 257, 258 for Meta. Netflix, on the other hand, once again down about 44 basis points. I did a complete analysis on Netflix in yesterday's market update, considering that it's oversold, but it does need a lift from the entire market in order to really go somewhere. So we're going to keep a close eye inside this green rectangle. That's going to be that support. Resistance is going to be at sub $400 for Netflix, and all the way up to as much as $452. So right now we are definitely selling off, oversold here, but it's going to offer up some pretty good risk-reward trade-offs and some opportunities in my view. Google, on the other hand, support level is going to stay put at 127, resistance all the way up to 131, 132. So this right here is going to be that level to watch for Google, and support level is going to stay put at 127 for the company as well. So right now we are seeing a little bit of a pullback. Again, RSI is coming down, MACD is coming down. So resistance 132. We'll see if you actually do get rejected at those levels, or support level at 127. I would be a lot more interested. Again, the lower it gets, the better. Sub $100 would be ideal for Google. Talking about Microsoft, and Microsoft here starting to break down from that support of $312, $313. In fact, it's just hovering around that level, but still in the context of this downtrend, so lower highs and lower lows. And support level is going to stay put down to this lower low at $292 per share. Sub 300, I think, for Microsoft would be better. Not ideal, would be better, because the valuation right now is still too expensive on a PEG ratio basis. And of course, the lower it gets, the better the valuation will become, in my view, on Microsoft. And finally, we got Shopify and Enphase. Shopify here starting to fill a little bit of that gap, coming down to that support once again at around $51, $52. We still have this gap to fill all the way down to $44. A much more important support here. Very oversold for Shopify as well. And finally, we got Enphase, and Enphase here on the day just consolidating sideways at 120s, still getting a lot of accumulation in my opinion, really not going anywhere. There is a bullish divergence that's forming right now for Enphase, and right now we're still very much inside this green rectangle, inside this good deal area for Enphase. It's pretty much been there for such a long time. So I hope you guys enjoyed this video and a complete update on the markets. Just please remember that, everyone's on a different path. Everyone's on a different journey. So I always would encourage you to do what's best for you, right? Don't get peer pressured into doing anything. Just do what's best for you. Whether that means, buying, aggressively buying, holding back, holding some cash, selling, diversifying into other assets. You have to do what's best for you at the end of the day. That's really what it comes down to. And then one last thing, of course, just fair values are different compared to undervalued levels, and what that means. So I hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining. 16% annual discount that's available for 2 more days, and you can access that with the link down below. So always happy investing, and I'll see you all in the next video.